Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. We are recording here on Saturday, the 16th. My name is Ben Maldonado, and as always, I am here with my partner, Barrie Hederachi. How you doing, Barrie?
Doing pretty well.
Yeah.
Last week.
What did you think about the last week?
What to say? I just felt like it's kind of rowing in the same place.
Yeah, marking time a little bit, huh?
Yeah.
Well, let's check out Bitcoin and see. Bitcoin's a perfect example of rowing in the same place as it goes sideways again. The key thing, I think, on Bitcoin, when I was looking at it and reviewing for the show, we've got our targets down here in the 9,000 to 12,000 range. Those are the ultimate targets. I'm still thinking this time target, the 141-day cycle that we've seen from low to high in the past, and here maybe we're going to get it from high to high. We could hold up and make some sort of high into this mid-August, August 17th timeframe. That's kind of the base case that I'm looking at now. I don't think it's going to be a high up here or anything. Maybe we get back to this 25,000 level, like up in here, and then we roll over and go in and make the terminal low. But let's see. Otherwise, it's, same old story, weak sideways. So if that pattern continues, we may not even make it up, to test this full square. We may just roll right over.
Which is what, 24? Is that right?
Yeah, it's about 24.6. 24.6, call it. If you add an eighth in there, that could get you to, 26, 27, 26,700. But we'll see. Not a lot different, although this holding of the low is encouraging. If we can, break this downtrend line, then we can at least test this 24.6 area. So that's all I got on Bitcoin. You're going to do the big five. It's a big day in commodity land. So when you throw it back to me, we'll have a lot of work to do on and looking at the commodities.
All right.
There's the
Can you see that, Ben?
Yes, I can. Coming up on a timing.
Yeah, there's some timing. I'll tell you what, this, well, I was just telling you earlier before we started recording, I said, I'm getting bored with these charts. And you can see why. Look how we've been, we're just in the same area for how long now?
A month.
Almost a month.
Yeah.
And, that's exactly when we get some kind of a breakout. So we got to watch it
sir.
every time. So, all right. So you guys, if this is the first time, go back and check a few other episodes, because we sort of tell a story and, the whole thing kind of weaves together week over week. So if you haven't seen the previous ones, watch a couple to catch up, and you can be up on the same page. That said, let's take a look at the S&P. So the big thing to remember is, we had this low that came in June, which was 144 degrees down. It also is an important point on a weekly basis. And that low has held so far, and that's encouraging. Now, the question is, what next? The fact that we didn't take out that low in about a month is positive as far as positive goes. Now, we haven't been able to muster any kind of a decent rally off of it. But I was looking at this, Ben, we've had, we can call this a 1, 2, 3 down, right? And if that's a 3, then within that, we have a 1, 2, 3, 4, 5. So we had a complete 3. And then this could be a 4. Possibilities there, eh?
Absolutely.
And so far, it's acting like one, especially if we're calling this a second. So we get a 1, 2, very clean 2, complex 4. So it's possible that we're doing that. We'll just keep that in mind. Going back to the levels, the encouraging thing here is we've held that low that came in, and it was an important timing point. We're kind of looking for it to rally up and test, but every week we talk about these levels, but the market's not able to take these out. And last week, we left it with 38.50 again, and we were, basically below that level for the most of the week. Friday we managed to pick up a little bit. So going on to next week, I think it's pretty much the same case. We want to see if we can hold above 38.50 and take out 39. So 39, let's say 39.39 is basically this 50% of the square. And we have to at least obviously take that out in order to, make any headway one way or the other. And if we do take that out, then I think we're set up to go up and test these, 4,200, 41 and change up above. I think the upside squeeze or some kind of a move to the upside is not that difficult. The difficult part is breaking out of this range, breaking out of these sticky numbers down here. So 3850 again is going to be the key level for next week. See if we can one way or the other, either get on top of it or not. So that's still the balance point for next week. Do you have anything to add to that?
Just I have some timing stuff that I was working on, price and time that said possible 4,200 target by 729. So it fits in with where your resistance area is.
If we can hold this 3850, I think maybe that's possible. But first, we got to break out of this mess here.
Agreed.
And up until then, it really, to get to the, really get a traction on the long side, we really have to hold about 3850. And once we can do that, maybe hold up in this area between 3850, 38, 3940, this area, then I think that'll give us the base to move higher. But long as we can't really get above the hold in this area, it's weak. And it might continue to slosh around, sort of making a case for that fourth wave kind of action. And if that's the case, that really is a four, then we're going to get a fifth down, clean up before we do anything.
Right.
So we'll watch that. Let's take a look at the weekly S&P chart. We did 72 down, which is the same 144 we saw on the daily chart. Again, we just can't seem to get any traction. We were up 1 week, in 1 to 3 weeks sideways to down, and so to me that's sort of a holding pattern. It's clearly not all get out bullish. So we have to be patient to see if that 3850 can be taken out or not. If it can't be, then I think we're probably going to go up and test this 3550, 3570 area down here, which is the next big support. So 3570 to 50 will bring us right into this cluster here. That's what we're looking at. Moving on to bonds. Well, last week we left it off at, we hit the week before that, we hit the resistance. We had this trend line working, and I left it off at saying that we should probably hold above, holding above the square would be bullish. And we did hold about 37 and a half, 137 and a half. And that's pretty good.
Short term, it looks bullish, doesn't it?
Yes, short term it looks bullish, especially if we take out this trend line next week or when we do, watch out, because we could really run up in a hurry. And
the top of my square on the daily is like 142 and a half. That's a kind of target right now for me. Up in that area. Based
on this square, if we take out this line, we're 146 is not too far.
Right.
Because that's really the next sort of major resistance. Let's see, off of the leg here, on the last leg down, we did 72 down fairly nicely, and we held it there. And the stalling point is, of course, that square 72 level. That's why if this gets taken out, that opens up a lot of upside.
Sure does.
This is really the key level to watch, see if we can take out that trend line, clear this level. So it's basically bullish, as long as we're holding above. So 137 and a half, I would say, as long as we're above that, we have a shot at 146. And I'll just leave it there. Looking at the weekly bonds, we stalled out at that 141 level we've had on the chart for a while. Of course, the low came in square and a half. So this is, if bonds are really weak, we wouldn't hang up here for 3 weeks. So the fact that we can hold up here is somewhat bullish, right? Means the low might be okay for a bounce. And weekly basis, 150 is really the next resistance. I know 146 showed up on the daily chart. So this is all looking bullish, providing that we can hold this 138 and change.
It looks like the peak inflation narrative is playing out through bonds being strong.
Right. Right.
Mhm.
So we'll see how that, it looks like there's more to go. So let it finish up and
Agreed.
we'll catch it on the other side.
Mhm.
Crude, well, crude broke through our key level here. 97 was the key level to watch. And, if the market was really robust and bullish, we should have held above that and continue to rally. And we didn't. And so that's a sign. So I think crude's probably going to be soft going into next week, maybe the next couple of weeks. And I'm going to have to treat it that way as long as we can't get a hold above 97. Now, at some point, let's say we get up to 100, come back and we hold above 97, then we're on the upside again. But this 97 is sort of the key balance point for now. So we'll see how that.
What's interesting, Barry, in that chart, and I noticed when I was reviewing crude as well, look at the false break and reversal we got on Friday.
Mm-hmm. Here, yeah.
Yeah, that's I'm not saying it gives it an all clear, because clearly there's resistance there at 97 that you have to deal with, but that is definitely a sign to watch. If there's follow through Sunday night, Monday, and we move higher,
Mm-hmm.
It's pretty strong evidence that maybe the correction has ended.
It's possible. We did 72 down, right?
Mm-hmm.
We did, we're working a nice 72. We had 72 high to high over here.
Mm-hmm.
So the square 72 is working hard.
Yeah.
And I see we had 91 as some kind of a support level. So we'll see, that's possible, but 97 is the key level to watch for upside to get traction again. So if that was indeed a false break, and it could be, we'll want to see some evidence up here, price
Agreed.
level wise.
Yep.
And looking at the weekly chart, again, this 90-degree level around 97, 97 and a half was the key support. We really dipped under that. So this is definitely not, let's just say, strong bull market price action.
Mm-hmm.
It's getting very sloppy. And of course, we closed at 97 and a half. So we really have to pick one or the other. If we're caught around 97, it's probably going to be continued chop between 95 and 97. And you don't want to get caught in that. So it needs to really either clear to one side or the other. And for now, I'm just waiting to see which way. And the fact that we already sort of violated 97, even with the potential false break, it's soft, right? It's weak.
Mm-hmm.
So might not have that much gusto to the upside. But we'll watch price action and see how it goes. Next, we have gold. Last week, I pointed out this 90 by 90 square. Now, if that square was actually going to have some traction, we would have taken off, and we didn't.
Mm-hmm.
So it tells me gold is not done yet. It's still soft. And we're probably going to want to test this 1676 area. And speaking of false breaks, that would be the ideal place. We got a whole bunch of lows here, all through here. So 1676 is a level to watch. The fact that the square didn't hold means it's really weak, and we can actually get much lower. So I would watch that close.
I mean, one of the things I'm watching on that, because I was looking at the gold as well, is this cluster of lows here around 1673.
Mm-hmm. These over here?
Yeah. Wouldn't be surprised if, just because this is what commodities do. If you go back and look at commodity charts, before they make a big move, they usually do some sort of false break in the opposite direction.
Yep.
So if we come down and clean up all these stops and take out the lows, that may be one of the signs we need to say, okay, the leg up is starting. So
sure.
I'm going to be watching that closely.
Yeah. I think this 1676 is really the next level to watch for now, especially since the square didn't hold. So I think that's where it's going at a minimum.
Mm-hmm.
And looking at the weekly gold, 1670 weekly basis. Well, we have a ABCD that sort of targets the same areas. It's possible we go down there. It looks like it's destined to get there.
Right. It'll give you the ABC and a false break all in one.
And a false break all in one.
Yeah.
We'll see how that works out. but that's what we're looking at for now. And we've been all bullied up on gold, and I think it's still bullish long term. It's just a matter of, is it practical to be trading this in here? I mean, if you got deep pockets, you're playing the long game, any of these support levels are okay. But for trading, I think we'd want to wait till these corners come in and we get some kind of a trend in one direction or the other. So for now, its trend is down and looks like the 1670 basis weekly looks like the next reasonable target. Yeah. And we're on to the dollar. Talked about this 107 and a half being a key level. And long as that we're holding above that, the dollar is going to continue to be strong. And I would stick with that. Now, we did get beautiful 3 drives.
Right into a timing.
Right into a timing line. There's a couple of other timing lines in here. But instead of going with time alone, I think this 107.25 to 50 is the level to watch. Long as we're screwing around above that, dollar's not done, and we can get up into 110, 112 up in that area. So 107 and a half is the level to watch for that. If we get under that, then maybe dollar's going to have a little bit of a breather. But for now, as long as we're above that, it's in a strong position. There's no question. And looking at the weekly,
you're sitting on top of the 144 now.
Yeah, so that 107 and a half is right in there, and that was a target for a long time, and that didn't take much to get up there. And like I said, it blew through the 144. So long as we're above this, 107 and a half, let's say, it's still bullish, and we have more to go. And this 112 and a quarter looks like a reasonable target. All right.
It's a good number, that 107 and a half area.
It's a good one to watch to see how the balance, balance works.
Well, we got parity.
And we're down 240 degrees from the high. And I had some other levels that matched up down through here. I don't know. Does parity mean we automatically get a bounce?
Psychologically, maybe.
Possibly, right? Well, who knew, right? Well, here we are. And so the next, at this point, resistance is really, 102, let's say 103 is really the resistance level, which is the half square. And of course, that's a lot of room in here. And I'm guessing we're probably going to hang around here for next week. Unless, of course, the low goes, which is 240. If that goes, we can probably, dip a little lower. And I'm not sure if we'll have the same kind of momentum, but wow, what a move, eh?
Amazing.
Just about a year, yep. Amazing. So we're kind of on support and looking for some kind of a consolidation above parity. See how that goes. And looking at the weekly, I don't know. I just feel like it's not done.
Right.
It just has this we're not done kind of a look. Either way, there's 103, 104. This area is major resistance. So the uphill battle is going to be intense here, insane.
So maybe a breather as opposed to it's being done.
For sure, yeah. I think a breather is. That's why I was wondering. Is a little bounce mandatory after we hit parity, right? Yeah, it's weak, and we might get a little bit of a bounce, but not much.
Right.
Yeah, that's all I got. Not much to, nothing. It doesn't feel like a whole exciting week, but things happen when you get to, I've noticed when I get really bored when markets are just kind of blah.
That's right.
It's time for some kind of a change. Shifts happen. So it's possible next week, all hell breaks loose one way or the others.
Right.
So heads up and watch those levels. And let me put it back to you. Cover the commodities.
Excellent. Good coverage.
Thanks. There was the NQ.
Yeah, NQs looking like going to try and get out of the sideways this week, but we'll see. By the way, if you like the work and you like the videos, please make sure to hit like and share and subscribe and ring the bell and send the links around. That helps us get more people listening. So, all right, let's jump into NQs. Last week we were talking about the fact that, we were pressing resistance up here in the half square, which is, a little over 12,000, call it 12,200 area. And were we going to be able to break it and break out? Well, second test failed. Then we came down, made another higher low on the full square, which is very bullish in my work. And then we've turned back up. So the next big test this week is going to be this half square at that call it 12,200 area. We get on top of that and stay above it and sort of break these highs here, then we're looking at the full square, which, call it 12,800 area. This downtrend line had been pretty sticky. We broke through it. Look where the pullback low came, right? Right tested on it. So that's a good check back. We sat on top of the full square. As long as the stars align this week, I think probabilities favor that we're gonna break out and get above this half square, and then we see what happens from there. Anything you have to add here?
Well, it's the same kind of the idea. We had this watching the looking at the S&P. We had that 39, 38, that area, which is pretty much at half square level on the NQ. So if we can break that, I think, that'll pretty much set up the upside. So
it should be a pivotal week. We should get, because we're squeezing tighter. Like if you look at this as the flat top of this triangle, we're squeezing tighter and tighter. So we should get a resolution this week. And let's see what happens. I'm positive on it. We'll see if the market decides to break through and sit on top of that square, then we know we got the wind at our back if you're bullish. So on the commodity front, now that we're going to dive in on the commodities, last week we started, a broad coverage of commodities because we're coming into an area of lows. We had good square outs, hitting supports. That continued this week. The reason why I said, we want to wait and see the first bounce and then the pullback is if we make lower lows and not a false break low, it means we're not done yet. Some markets made lower lows, some did false breaks. So we're gonna go through several of the markets again. Nothing is fully set up. Pedal to the metal, get bullish on it, but they are setting up. Squares are coming in. We're coming into important timing cycle wise. A lot of these markets have gone down 144, which in the commodity world, in addition to the stock indice and futures world, is big. And so we're getting the numbers and price action that we're starting to see, pointing us again towards the fact that we're at a corner and the swing lows either are coming in, are in, or they're going to be in shortly. So let's jump through a few of the ones that I want to highlight, knowing that, again, this is not dive in both feet bullish yet, but you got to have it on your radar because these things are setting up. Let's start with wheat, which is in the grains. And then this is a perfect example of what we discussed last week. We had this low last week and we'd started moving up. And I said, okay, we want to see where does the high come in off the low? And then how's this next pullback? Do we get a higher low or what happens, on this pullback? Well, as you can see, we made a lower low. So if you're catching knives in here and putting a stop here, they got you and they will get you. So this is why you want to wait and check it out. The high came in where it should have on the full square, right? We couldn't clear it. Now we've pulled back, made a lower low, but look where we're catching support now.
Yeah, it's
right?
Key level.
Yeah, key level on this full square is 772. Again, the way commodities work, I wouldn't be surprised if it came in and took out these stops here. Right? Push it always a little further, which would be, another quarter square basically. And those are, you call them in the 740 range. And these are the lows from, early this year, late last year. But we're coming into a spot where this is good support, right? Structural support on a full square. So wheat is completely on the radar, looking for evidence that, we've got a turn here, and maybe it's going to set up to where we get a third drive lower, right? We've got 1, 2, do we get a bounce and then one more push that takes out these
That would be
lows?
ideal. Yeah.
Yeah, that would be the perfect setup, right? But it's worth watching, right? We're in the vicinity of a low. We've had a really big correction. We've seen square outs here. We did 144 here, 144 in price, 90 in time. That's a good square.
Yeah.
So it's on the radar. Watch it closely. Any other comments to add in on wheat?
No, we're good. We're good.
Just have it on the radar.
Yep. The thing is, from that low to about the next square, they're all key levels. So we're getting into that, really good support area. So it's just better.
Absolutely. And when you look at all these markets, you're going to see very similar situations.
Mhm.
Here's corn. Again, like wheat, we had a low on a half square here, good square, nice bounce up, the pullback. This one's made a higher low so far, which is interesting. Don't think we're clearly completely out of the woods yet. Could we set up some sort of chop here and then again drop down to take out these lows with some sort of false break? Absolutely. Look at the pattern. We've got squares. We've got support, structural support in here, sitting on top of all this price action from late last year, middle to late last year. Support line. Again, watching corn for signs that we can get up, sit on top of a square, make another higher low. These are the kind of things we want to see price action wise to actually engage. And, we can use lower time frames to do that. Anything else to add here on corn?
Well, I think it's just a matter of waiting for the traction to show up.
Yeah. We're in the area of a low. Now we're looking for signs that the bulls are stepping in and taking positions. That's corn. Here's beans. Similar situation to corn. We had a low come in, nice bounce, pulled back. Now we've got a bit of a higher low. The thing I'd say with beans, there's really good support on the higher time frames in the 1270 to 1280 area, which would be all the way down here.
Right.
So you have to be aware that that's possible. If we're really going to get a washout, we could see that. On a shorter term basis, looking at the dailies, coming down and testing the full square, like right here around 1400 and holding would be a really, really good sign. Anything else to add on beans?
Well, just to say that, beans, corn, wheat, we're all closer to some kind of a low than not.
Agreed.
And I think so. It's time to really start watching.
And also know this, this isn't a fundamental analysis show. The supply demand dynamics in these markets all favor higher prices. Limitations, shortages are happening all throughout the growth cycle of these crops, where there's fertilizer issues, there's planting issues, there's weather issues. I mean, really, the fundamentals are at our back here, and interest rates have little to nothing to do with whether people need to eat. So, very, very positive on the grains. We're just really looking for signs that the selling's done and it's time to jump in. Let's take a look at silver now. There's silver. Barrie covered gold, and as he showed very well in his review, just like the grains, we're in an area where a low can come in. We don't have definitive evidence that the low is in yet, but we want to be on the sort of on the lookout that, for those signs to be able to engage, as early at the earliest possible point with a good risk reward ratio. I think we're in a similar situation here with silver. Last week we came down and we were sitting on top of this full square. Price action on Thursday, we lost it. Now we're below it. So the key things to watch going forward now is, can we get back above it? Can we sit on top of it? Can we break this downtrend line and then begin setting up to move higher in silver? The squares are coming in. I'm seeing some divergences on the shorter time frames. So again, it feels like we are getting into the zone where in the next week, in the next month, in the next 3 months, we're going to find some sort of good corner in this market with a lot of upside and relatively little downside risk with the proper entry. Anything else you have to add on the silver chart, Barry?
Oh, just being patient through here is all.
Yeah. From here to here, we have a really good square as well. So this is why I'm sort of giving a heads up to everyone to watch it. Let's wait for the price action to confirm. But silver is another commodity that's on the radar. Here's one that's been decimated that is fully on the radar now. A lot like last week, and this I'm giving you examples to show you why we wait for the pullback to see what what shows. We had this low and then we bounced up. It looked like we held the full square, and then price action during the week, another flush. So here you got your second drive of a potential 3 drives coming. Copper on the shorter time frame, like a 4-hour, has a really good square, 180 by 180, with divergence at the low. We've got daily squares here from this high and this high. Doesn't mean we're done, but again, if you look left, look at what we're coming into here. Sort of this level of, this price action for 4, 5, 6 months sideways as it was breaking out on the way up. So copper, I'm sorry, is definitely on the radar. We want to see if this half square holds. By the way, all the levels, because we always talk about full square, half square, all the levels that we're watching are on a Google Doc spreadsheet that we will post the link to with the video. So if you don't write them down or missed one while you're listening, you can pick up the levels off that spreadsheet. So copper looks like it's trying to hammer out some kind of low here. As you can see, we've had quite the move off the high. So we're just, again, looking for the setup on a lower time frame to potentially get in on this market for the next leg higher. What do you have to see in this copper chart here?
Well, I'm not seeing it running into a booming economy, I can tell you that.
No, that's right.
So this is, it's showing sort of coming colors, right, over the horizon. So far, it's fairly subdued. So it might be a little bit longer before copper gets some kind of traction.
And price will tell us.
Price will be the first.
Yep, well, we will know based upon price. Let's go check out one of the energy stocks or commodities, sorry. Natural gas. This has been the star commodity this last week. This is the bucking bronco, but as you can see, even with the volatility, the squares help us define the limits and the price action and give us a way to handle it with a positive risk reward ratio. So we came in and we made that high, sharp pullback, which we talked about last week, but the pullback came right into important support area, the area of the half square and the area of these highs that we saw in late last year and early this year. We had a good reversal off of that. This bar I really liked because, as we've said on previous shows, when you get a bar that can, stay fully on top of the square, that's a very bullish sign. And you can see what happened on Friday's bar. It came down, tested the full square, and then we closed near the highs.
Mhm.
So gas looks like it's ready to go up and test the half square and call it the 760 area. If we get through that, then it's up to the full square around 880. We broke the sharp downtrend. The key thing here, if you already don't have an entry, is what happens on the next pullback. Do we hold on top of the square here like that bar, or do we make a higher low? Either one of those happens, and you have the odds in your favor for a bullish resolution. What are your thoughts here on natural gas, Barry?
Well, it's holding up fairly well, and I think that square line is the key level to watch, especially if you look at the October highs that we had. And well, it was kind of like how crude was doing. If crude was holding above 97, it can always, it's much easier to move higher. So I think natural gas is kind of in the same spot.
Right. So this is your key spot. Yeah, your key spots here.
Mhm.
And that's the 640 level. And again, that level is in the spreadsheet. So as long as we're above 640, odds favor a bullish resolution here.
Mhm.
So that's nat gas. Barry talked about crude. We know the levels and everything on crude to look for. Let's do a couple softs, wrap it up with a few of the softs. Here's sugar. Sugar I talked about last week, and we were right in here last week.
Mhm.
The reason I mentioned it is we finished this ABCD down, and I said the price action after that will tell us a lot. We kind of catapulted out of here, pulled back, stayed on top of the square, and then Wednesday, Thursday, Friday are making a push higher. The next big test is this half square, which is, call it 1950. We get there, we clear that, then we're testing this quadruple or quintuple top, whatever you want to call it, at 2050. The breakout out of here, if we actually, can break out and sit on top, is going to be tremendous, because you can see we've been stuck for a year here. That's a lot of potential energy built up.
Mhm.
The other thing to notice on the chart is we had a low, higher low now. We can get up here and get a higher high. This could be the big move. I think sugar is a coiled spring, and we're just waiting for it to snap, so to speak. Where are you on sugar here?
I agree. It really didn't sell off with the rest of the crowd, so it's holding its place firmly, and I don't think it'll be difficult to move higher.
Now we just got to take these levels one at a time, 1950 and then 2050.
Yeah, at least till we break out of the range, right? So
Yep. So we'll see. We'll see what price action tells us there. And the last one, here's one you can see Barry's reference to how sugar has held up relatively well. Here's another soft, and we'll show you what the difference is between actually getting a correction and going sideways. Here's cotton.
Mhm.
Now that's a correction, right? So we've been watching cotton. We rode this, a couple of these legs up. We had the rollover and a huge flush down. Now the reason why I am highlighting cotton here, you can see we've got 3 completed drives, right? 1, 2, 3. Now, if we can come up and sit on top of this square, that's really going to be a positive sign that a potential significant low is in on cotton. Because we've got 3 drives at the end here. We've got 144 by 240, high to low. I'm sorry, that's on the 4-hour. On the daily, it's 144 by 54.
That's good. It's a good square.
Yeah, it's a good square. It's again that 144 that's really important in commodities. We have an outside reversal on Friday, so early this week, I want to see price action. We need to get above this, call it 91.80 level, get above that, sit on top. Then we can start, talking about, okay, where can we get an entry and where can we, get bullishly involved here in cotton. Also, look where the low came in. This whole range going back to early 2021 when those highs were coming in and we went sideways and then took off. So I have cotton on the radar, watching for signs that we can make a move up, give us a higher low, sit on top of support, and then we get involved with a positive risk reward ratio, because this looks like a potential good corner. Incidentally, we do a monthly chart review, and when we do the monthly review, I'll show it, but I'll just mention it today. On a monthly basis, this low in this area here, we're testing the apex of the triangle that was the breakout to this massive move higher. So we came back and we tested that apex, which is very important technically. So it's just, there's pieces of evidence stacking up that we may have seen a low here in cotton that's tradable. Anything else to add on cotton here, Barrie?
Well, it's just waiting for price action. That's all.
That's it. I mean, the pieces of the puzzle are starting to come together, but price is the major determinant that tells us whether it makes sense or not.
Mm-hmm.
And so we'll see the price action in cotton this week will be very telling as to whether, those three drives are valid. We got a decent low here and can start building for a move higher.
Right.
So we'll see. So the bottom line, just to sum it up, there's a lot of activity in the commodities. We're getting to inflection points here where I think our job in the markets is to look out, 6 to 18 months. And the price action generally reflects that. What the things we're seeing today where, whatever fundamental issues that are in the news today or being talked about today are not what's going to drive price going forward. So we need to look at the markets thinking of what's the world going to look like in 6 to 18 months. And if we're at big pivots and these squares are going to hold and the commodities have come in to support, it sort of fits our bigger picture of the cycles calling for shortages and limitations, for the next year or so. So it's why we're excited, why we're sort of eyeballs glued to these commodities, because the trade setup, when it comes, if the fundamentals follow it, which we believe they will, they're going to be really, really big moves like the moves we've seen over the past couple of years in them. So it's what I'm going to be looking at this week and focusing on. Where's your focus going to be, Barrie?
Well, mainly watching the S&P bonds and gold.
Okay.
That'll be the key. And of course, we got crude and we got to figure out which side of the line is going to settle on. So
that's right. Yeah. Like a lot of these commodities, it's had a pullback now. What's price action telling us about what's going to come next? Because that's the question.
Yeah.
So we'll see. Have a great week, everybody. Barrie, have a great week, and we'll talk soon.
Thanks, Ben. Good job.
All right.
Have a good week, everybody.
Thanks.
Bye-bye.